Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the news associated with those precious metals prices. Without further ado, Miles, well done on the charts last week. Seeing some key support levels tested this last just matter of 48 hours, really.
Yeah, you always love when a plan comes together, right? And by plan, I mean blind squirrels throwing darts at a Wall Street Journal. But sometimes this stuff works out, and it is nice to see some of these resistance and, in this case, support levels getting hit in the metals across the board, because Wednesday, the 26th today, and gold's up, silver's up, platinum is up, palladium is still kind of hard stuck in the sideways trading pattern it's been in for a while. So let's go ahead and dive in, take a look at the gold price. Gold coming back up to the high 1950s, low 1960s today. I still think it's going to run out of steam. I don't think we're done on the downside yet. I think there are some broader economic and social reasons, and then one big political one coming up in a couple months that should not necessarily push the gold price down, but just take the eyes off of the bull market for a short period of time.
Well, we will see a lot of volatility one way or another after the election. That I'm pretty confident about, and it's tough to predict, obviously not the outcome of the election, but it is tough to predict what the impact of those results will be on the metals prices. If we were to just sort of take a general approach, and I'm going to do this because we get asked this question every day, multiple times a day, what about the election? Is it going to go higher before the election? Is it going to come down after the election? And I think that it could come down if President Trump wins re-election. If Joe Biden wins, then I think that you'll see the metals prices rally sharply, and I think you'll see the equities markets drop sharply in response to that, just because that tends to be, a pro-Wall Street versus anti-Wall Street sentiment for the most part. And again, no guarantees there, but I wouldn't hold off and wait until after the election to be positioning in the metals for the first time. I really wouldn't.
No, and one of the biggest concerns for me, obviously, if you're already sitting on a healthy metals position that's acting as that primary reason why you own it, preservation, inflation hedge, all the reasons why everybody, regardless of price, should have a precious metals position. But if you're looking at adding to positions over and above that for the sake of investment return or taking advantage of the ratio trading strategies that we employ with our clients here, then sitting around waiting for some of these market reversals and some of these lower price points that we are constantly looking for as opportunity isn't a bad strategy to try to maximize your ounces over a period of time. But in the long run, when silver's $50, are you going to care if you spent 24 or 26 on it? I really don't think you are.
No, it's great for dollar cost averaging. On sizable accounts, we'll do that pretty frequently, whether it's a retirement account, your self-directed IRA, or a storage account, something where you're moving large dollars in. It is good to dollar cost average because every percentage really does matter. However, you're right. In the long run, when silver's back at all-time highs, you just aren't going to care that much. Other than the fact, I will tell you that it helps you sleep better at night, that you didn't necessarily make the decision to put it all in one fell swoop and then have buyer's remorse just because you see a little bit of a dip the next day. So definitely don't worry about that. It's always going to happen to everybody that acquires any asset, whether it's an equity or a commodity. But for now, the bullish trend continues, right, Miles? And anxious to see what your next resistance points are to the upside and reiterate those support levels.
Sure. Well, obviously, long-term, I'm bullish on all the metals. I think that's hard to argue with still at this point because we haven't seen the bigger major second and certainly not the third phase of a major bull market. So question, of course, just being when we have these corrections back down, how low? Gold did rebound. We looked at this a second ago. Gold has rebounded, hasn't put in a higher high. So I think tomorrow, by the time this show comes out, we'll be able to say if we could be pushing a little bit higher on the gold price. However, in the medium term, over the next couple months, I'm still short-term bearish on the metals. I think we are going to see slightly lower prices. You're going to have these kicks back up from time to time, just people buying at some of these lower Fibonacci levels, some of these lower entry points. So we'll see over the next couple days. But like I said, gold hasn't put in a short-term higher high yet, so it's still trending down. Silver did put in a slightly higher high, but again, coming into that 50% short-term correction line, been bouncing against that quite a bit, really going back to the beginning of this week and even end of last week when we first hit that. So Reversals happen sometimes. We'll see how this plays out in the next day or two. Same with silver. I'd love to see silver come down sub 25. Now, that's going to be a pretty deep correction in the short term, but it's still just barely scratching the surface and kind of gives us a double bottom. Because remember, we came all the way down to 24 at the beginning of this month. So I'd like to see us put in something that resembles a double bottom there before we take that next leg up. And that could happen over the next month as we're gearing into the election, which will bring that volatility. It's not going to change the trend. News doesn't change the trend, but it does speed up or slow that trend down.
Yeah, I totally agree. I would love to see that too, just because that is an indication to me of a healthy market. I don't like when it just runs. I don't like when it goes parabolic. I don't like when it separates from the moving averages too far, too fast, because what separates widely ends up narrowing that gap quickly as well. And so this is a nice, healthy market. Look for any opportunity to buy on the dips here in those low 26 to the high 24s, in my opinion. And don't look back, because you're going to have to refresh your own memory with how quickly we went from 17 to 21 to 24 to 29. And you're going to start to see that same type of speed resume, whether it's something geopolitical, whether it's something like the Fed discussion that's coming out of Jackson Hole tomorrow. I think a lot of today's price action actually has to do with pricing some of that in, because Chairman Powell, who's going to speak Thursday during kind of a virtual version of the Fed's annual Jackson Hole, Wyoming conference, is going to outline what could be the central bank's most active efforts ever to spur inflation, right? To spur inflation, in their opinion, back to a healthy level. Well, what does that mean? He's going to basically say average inflation targeting means the Fed will allow inflation to run higher than normal for a period of time. And so buy gold, buy silver. And that's outlined really well. And we'll see what tomorrow brings. But I think a lot of that, those dovish type of comments, is like Mario Draghi with the European Central Bank leading up to the whole fiasco from last fall. And people just started buying gold. Some of this rally is because of the expectation of this Powell speech tomorrow. And he gives it, we might see the beginning of your little bit of a pullback afterwards, because you kind of price in the rumor, right? And then you sell the reality right away, having made some good returns in a 24-hour period of time if you're a trader.
So following on the expectation for what's coming out of Jackson Hole, I think we're starting to see a slight detach between what you could say is maybe a metals response, a buy the rumor, sell the news metals response in gold and silver, and to some extent here also in platinum. But we are starting to see a bit of a detach between the industrial metals and the currency metals. While gold and silver have been stepping down for the last week or so, platinum has actually been stepping up. It did put in what looked like a short-term double floor here at the end of July, and then touched again last week, end of August, and has actually taken a couple steps up since then. Now, platinum is also up today along with gold and silver, but like gold, it's not yet put in a higher high. So it almost looks like platinum is stepping up to turn down, whereas gold and silver both look like they're stepping down to turn up. Now, I could be reading too much into it, but there could be a bit of a detach because of the inflationary discussion, not economic discussion, but specifically quantity of currency in circulation, inflation. That's going to have more of a direct line into gold. Now, I think platinum is still due to have that rubber band snapback. So I still am trying to put as much as I can into platinum, but just be aware these day-to-day movements may look a little bit different between the industrial metals and let's call them the currency metals.
Yeah, I'm glad you said that. It's tough not to get sucked into the minutia, right, of the micro cycle. Keep your eyes on the macro cycle, and that is going to remain bullish. We still haven't had the impact felt or the true objective measures known from the stimulus that occurred in the spring and early summer, and there's going to be more. And so remember, regardless of what the metals do in immediate response to the election results, you've got months and years of inflation to price in, and it's going to be measured in the gold and silver prices, just like it was in 2010 and 11. Yeah, you saw a gold and silver increase in 2009. It wasn't until 10 that you really got the strong runs in 2011 where you hit the all-time highs, and that was years after that economic stimulus. Same sort of impact here. It doesn't matter who wins the election. There's going to be massive spending packages thrown. They're going to print their way out of this recession depression. You know, even President Trump has talked about for years, a $2 trillion infrastructure spending package to try to put Americans back to work and to rebuild our infrastructure. That's going to be very inflationary on top of anything that happens between now and then in regards to the COVID response, right? This COVID 4.0. So keep your eyes on the macro cycle. Nothing has changed. Just look at these opportunities as buying opportunities to add to your ounces over time.
Well, and you can see that in the equities too, obviously following the March drop, which is the immediate emotional panic response that we had take place in March. The equities have stair-stepped back up, but we've been looking at this for a couple weeks, the idea of where the U.S. dollar was in, say, January of this year compared to where the U.S. dollar is now, at least the dollar index, in that basket of currencies. The Dow is trying to get back up to those February highs prior to the March fall, and they're doing it at the expense of the purchasing power of the dollar. So we're seeing the Dow climb back up, but even today we had this big up day in gold. We had a big up day in silver. The Dow did nothing today. And in fact, on the other side of things, the dollar did nothing. So this could just be specific to the gold and silver market. This could be an emotional purchase. Just like the emotional sell-off back in March, this could be an emotional buy, like you suggested, based on the upcoming Jackson Hole Fed annual, what do they call it, a vacation, I guess, the Jackson Hole vacation they go on to meet and eat lobster. This could just be that type of response, where you're just seeing in the markets an expectation of redefining what inflation means in order to cover what we've done to ourselves since March. And like you said, if you want to know what impact COVID has had on the economy, well, ask me in 18 months, because you can't possibly figure that out now. It's too soon.
Yeah, we'll see what happens to the equities markets. The Dow isn't up substantially today, 83 points to your point, but still it's been stair-stepping up. It likes what it hears from the markets. It likes the spending. It likes the stimulus discussions. It likes the dovish talk coming out of the FOMC in Jackson Hole. So we'll see what happens there, but I expect it to turn down as well following the remarks from tomorrow. You'll see a little jump, a little spike, and then come Friday and Monday, it'll all be washed out and there'll be profit taken. But a lot of activity. We've got the Republican National Convention going on this week as well, on the heels of last week's Democratic National Convention. It'll be probably unremarkable in terms of any impact on the metals prices. Gold is not the only commodity that's hanging strong. Oil is. It's gone up to $46 a barrel. There's now a perceived shortage. In the world of geopolitics, not a whole lot to discuss. So basically the wind in the sails of the metals right now is still economically driven and monetarily driven. So that's it for this week's show. We appreciate you tuning back in and listening once again to Golden Rule Radio.
As always, if you liked what you heard, hit the subscribe button, ring the bell to get your weekly notification of our new show every Thursday. You can head on over to our website at McIlvaney.com, find us on Twitter at ICA Gold, or on Facebook, McIlvaney Financial. And if you have any questions about your personal portfolio and would like to discuss with one of our advisors here at McIlvaney ICA, you can give us a call anytime at 1-800-525-9556.
Thanks for listening. Have a great week.